if you wait, or if anyone waits, and for the rates to drop to, let's call it below 4%, at that point, the market has probably heated up and you're probably paying more than what you should have. Hi everyone, and welcome to another episode of Reality Check, where we discuss what's happening in Toronto's real estate market, where it's going, and help you make informed decisions buying and selling real estate. So this is Nima Khadem. I got Nick back there, and Tiffany's on vacation. So we're gonna do this one solo. So we're gonna talk about what has been going on for the last 3 months in the summer, June, July, and August. They were pretty slow, especially now that we're gonna look at the August stats. So let's get into it. Market watch. Number of sales, we're down to about 5,000 sales. We got the active listings going up. So the active listings are actually higher by about 46%. We're up to 22,600 listings at the end of August. Sales were done year over year by about 5%. And the average price right now is sitting at $1,074,000, as opposed to last month that we were sitting just over 1.1 million. So we got about 0.8% decrease in the price month over month. And the months of inventory, because of the buildup of active listings, that 22,600, because of this divided by number of sales that we had, we got 4.5 months of inventory. So this has been creeping up, because month before it was less than 4.5 months. And the way I'm looking at it, especially with the recent drop in interest rates, I think we're gonna see much better market conditions. A lot of units hopefully will get absorbed and the months of inventory will come down. So what I'm thinking is in September, we'll probably see lower months of inventory. And as we progress throughout the year, with the interest rates hopefully falling a couple more times by the end of the year, I think we could be looking at a pretty good 2025. Oh my God, can't believe it already. So let's talk about what's going on overall in the GTA market. So as we mentioned, the prices are done just below 1% year over year. Number of sales are down just over 5%. The inventory has built up 46%. So this is a recipe for getting deals. As the months of inventory goes up, this is the number everyone should be looking at if they're in the market to purchase. And keep in mind, this 4.5 months of inventory is for the entire GTA. This is different from market to market. If you're looking from Toronto to York region, Peel, Durham, for example, we got much less in terms of inventory happening there. So I'm gonna pull this up right now and look at what's happening exactly in the Durham region. So for example, we were talking about Durham region. Yeah, as you can see, we got just over 3 months of inventory. So GTA market, totally different. Durham region, totally different. And as we go to Toronto region, we see 5 months of inventory. This is crazy. I don't think we've seen over 5 months of inventory in Toronto. And the main reason for that, the main contributor to the 5 months of inventory is the condos. The condo segment is getting hit pretty hard. And something that we've seen right now happen in the month of August was we got just over 7 months of inventory for condos in downtown core. And that's something that we haven't seen. I don't even think back in COVID, we had stuff like that. Back in COVID, condo market hit around 5 months of inventory, but right now we're about 7 months of inventory. And this has pulled this number up for Toronto. So the months of inventory is higher. That is not to say if you're going to buy a detached or semi-detached in Toronto, you're gonna have a good time and you can start to negotiate down, because these types of products are still in hot demand and their supply is pretty limited. So I want to bring your attention to something that I think worth looking at when we're talking about these things. So average condo price last month, we're down to $682,000. And that's a pretty high drop of about 70,000, almost 9%, 8% drop month over month. And that's something we haven't really seen in the condo market. As we can see, all months have been hovering around 760, 730, 740. It's been all over the 700. And suddenly we had a huge drop in August. Main reason for that, main contributor for that in Toronto is the huge number of occupancies that we had in the first 6 months. A lot of units that go in occupancy, they don't show up on the market because they're getting sold if they can on assignment market. And every stat that we talk about doesn't take into consideration the assignment market. So if we see about 7 months of inventory right now for condos, assignment market is going to be additional to that. So these condos that went into occupancy, they all came into closing. And in August, we saw a lot of those turn back and go on the market. And this is why we saw so many units on the market. And the result of more supply, less demand, lower prices. But let's take a look at another segment that did a little bit better. The detached market. The detached market in Toronto is behaving completely different because of lack of supply. And over there, we had about 50,000 increase in price. And, that's something that everyone should really consider when they're looking at buying a property. Are you buying a condo, semi, or a town, or a detached? Because each market is behaving differently, and each micro market, talking about York region, Toronto, or even within Toronto, the downtown core is going to behave totally different in terms of condos than, let's say, Midtown Yonge and or around North York. So these are things, if you're looking to get in the market, you need to consider as a buyer anytime you are going to be purchasing a property. There are two main numbers you need to look at. One is the months of inventory, and two is the average prices. So months of inventory will tell you what type of market you're dealing with. So if it's below 3, you're in the seller's market. If it's over 4, you're in the buyer's market. 3 to 4 is pretty balanced depending on what you're dealing with. Market could be different, and I'll give you an example. If you're looking for a 1-bedroom condo, let's say right now around Midtown Toronto, you got plenty of option. You're looking for a 3-bedroom larger unit, there aren't that much supply, and the prices have held steady in the larger 2-bedroom and large 3 bedrooms. And that's due to the fact there's a good demand for it, not a lot of supplies. Nick, what are your thoughts on that?
It makes sense.
Makes sense.
Makes a lot of sense.
Larger units, a lot of people will need to.
These are more end user versus investors.
Exactly, yeah. So this is a main factor, because as the rates went up, it didn't really make sense to buy 1-bedroom plus tents to rent out, because you would be cash flow negative. Whereas majority of the larger units that were family friendly, people could actually move into and enjoy themselves. So those actually held their prices. And one of the things I usually tell my clients that are investors, if you are buying in a condo and if you can afford to buy a larger unit, I would recommend the larger unit for several main reasons. One, Toronto's population is growing and the affordability is becoming a huge problem. If you have a condo that's about 1,000 square foot or larger, it's ideal for people to move into and enjoy. And we don't have a lot of them. So as years go by, with the number of people coming into Canada, these type of products are going to become more valuable. The rate of growth for these type of products, I feel like it will be much higher than the smaller product, because there's a lot of them getting built, and those are mostly investor driven. So in a market like what we had before, where and we still have, that the numbers don't make sense and people are losing on their monthly amount that they're outflowing. So meaning they're paying their mortgage, the rent that's coming, it's not covering the exact amount of it, and they're going to be cash flow negative. So these type of investors will get rid of their investment, and the supply goes up. And this is why right now we're seeing a massive influx of condos, especially 1-bedroom plus tents on the market. Going into York region, type of different scenario because the condo market for the last 2 months have held pretty steady. I would say for the last 6 months, the prices have been pretty stable, and as opposed to what we see in downtown Toronto. And that's again because of the fact majority of those occupancies that we talked about in the first 6 months happened in downtown Toronto. It did not happen as much in the York region. And over there, there's not a lot of condos getting built to begin with, but there's a good amount of demand because you can go up there and pretty much buy a nice two-bedroom for $700,000 right now, whereas downtown Toronto, you're gonna have a tough time getting things like that. And going to the months of inventory, so the months of inventory is growing all over the city. I mean, August, we had Toronto over 5 months. GTA overall was 4.55. And if we look at York region was 4.7. So we're really close to 5. So overall, there was a built-up of inventory. What can we expect going into fall and winter of 2023? The way I'm looking at it is we just had a rate drop. What will happen is a lot of people will start to come back into the market. But we also had a lot of more people that took their properties off the market towards the end of August to relist right now because of the news hovering about the fact that interest rates were going to drop. So not only more people are going to come in the market, there's going to be more inventory coming into the market in September. So there's going to be more choices. For the amount of inventory to get absorbed, it's going to take some time. I think if we see at least 2 more rate drops by the end of the year, hopefully, if we see that, I think starting 2025 February, things are going to look much better in terms of people who bought and need to sell and get a better price. So meaning if you're looking to sell and you have the time to hold, then you may want to hold it right now and not put on the market because not the best time to be selling. But you need to also consider if you're buying in the same market, it might not be as bad as an idea because depending on what you're buying, you might be getting a good deal. If you're cashing out, however, if you can hold on to it, might be a better idea to hold on till market gets a little bit better, supply comes down. In terms of overall, what we can expect all the way to the end of 2023, I think September and October, I'm guessing it would be a little bit of a better market than what we saw overall in the summer, but I don't see anything drastic to be happening. When they change the rates, it takes 90 to 120 days to see the effect of it. What we're seeing right now is pretty much the effect of the first rate drop back in June. And for us to see the full effect of everything, we're probably looking at January, February next year. And for those who are looking to purchase, you may not want to wait that long because although right now the rates haven't dropped as much as they should have, or there's a potential of more rate drops, but if you get in the market right now, you're going to have about 45 days to find a place on average. You're going to have an average of about 45 days of closing. So you're looking at about 90 days. So if we have another 2 rate drops by December, that's right in time for you to do your closing. So you should be in the market right now to be able to take advantage of the better rates and better prices today. If you wait, or if anyone waits, and for the rates to drop to, let's call it below 4%, at that point, the market has probably heated up and you're probably paying more than what you should have. I think right now we're seeing one of the lowest prices of the year. August had a pretty low number. Right now, we're gonna look at some of the prices that we've seen so far in 2024. And right now, August was around $1,074,000. That's the second lowest average price after January, which was $1,026,000. And back in January, we didn't know that was a pretty low number because once an incident like that occurs and we pass it, we will see, okay, bottom of the market was last month, or it was 3 months ago. I think August was one of the lowest averages after January that we've seen. And I think going forward, we're probably going to be slowly, gradually going up in terms of average prices, number of sales picking up, and the inventory starts to shrink. If anyone's got any questions, especially about their situation, if you're looking to buy, sell, there are different scenarios. We would be more than happy to talk to you guys. I have my contact below. And if there is any questions, any member of my team would be more than happy to answer you guys. Guys, be sure to hit that subscribe button. It would mean a lot. It would bring our page up, and also hit that like button. And if you know anyone would benefit from this information, share that with them. And let us know in the comments below, how do you think the market will unfold for the remainder of the year? Do you think the prices are going to hold steady, drop, or we're going to start seeing prices increase? We'd love to hear what you guys say, and we'll see you next time.